All right, so we closed with Delta flat. I guess the market maker got to f everyone right there at the very end. Well done, Kenny. Well done. Nvidia, I don't think they've reported anything yet. Jesus Christ, we're like 20 seconds into market close. Maybe by the time I'm done talking through all these. All right, so GME, we got a little bit of the turnaround in the tips here on the shorter time frames. If we go down to like the 1 hour, they're already starting to collapse. Things are getting pretty tight here. This could, be an opportunity for it to bounce, right? A little relief in the liquidity, and then another bigger leg down. You know, 30-minute crossover, a little bit, but it's crossing back. So yeah, I mean, if it's going to get it, nothing really changes here from what I said last night. If we're above 20 and we stay above 20, there's still some risk that IV can spark and it can run, right? But it needs to get above 25 in order to pressure any of those positions at all. And so far, it's been unable to do that. It's even struggling now with getting above like 2250, right? So and that compression that you're seeing there is probably only going to get worse. And now, if you're looking at a run, the chances are it would top out closer to gamma max, a more standard kind of blow off after the bigger run, right? And the chances of it exceeding gamma max greatly and getting into like that Vega squeeze territory are significantly diminished, especially over time. The longer that takes to be realized, the less Vega risk there will be, because Vega is constantly decaying on those positions, right? So I mean, yeah, not a very different setup here. Again, if it loses 20, it can then fall further to the downside. That's actually where I'd be more interested in going long. If I were to go long, would be if it fell into the other range of supportive options down around like 15, 16, which it hasn't done yet. Upstart, another day, still kind of bleeding off after its big run also. Broke down through the 25 level, which was significant. We're going to start to see short calls come in there. Tips are converging. We're probably going to move into a relative period of shorting on that, especially with the index weakness. NVIDIA may offer something up on that front with pressure on bots, but probably not. Top closed above $2 today, which was something we were looking for it to do last night. Tips are starting to turn around here, right? And that could mean that there's like another impulse of liquidity over these like 5-day rolling periods where we keep seeing it kind of squeezing up a little bit more and more. This has to do with its ETF liquidity being very thin, and so this does look kind of attractive, and it may get another run to a newer high. As more and more pressure continues to build, actually. BNED, moving up a little bit. It's got a little support here. It's not impervious to another run, but getting back above $8 is going to be pretty hard for it. I'm probably just not interested in playing it right now. If we see the tips converge a bit more, or it gets above the sold calls at 750, then I might consider something for like a secondary blow off, which does happen, right? Like it can get like a little bit of a pop from the lows, right? A few times before it finally settles back down and comes off reg show. But we'll see. Go EV kind of just still flat at 260. Not a lot's changing on this. Nothing of note, at least. It's getting slightly more illiquid every day, but nothing big. Not enough volume really. BNED closed at 113, which is very good. Obviously, closing with those in the money means that the is going to be moderately supportive into the overnight session, and we may see another run up because people have not really slowed with their call buying. I think a lot more than the available shares in the float are tied up in the options chain right now, and going short this right now is very disadvantageous due to the offering coming up. So it could get moving. Nvidia, barely, not really moving. I guess they haven't announced anything yet. So Snow fired their CEO and they're up. Interesting. I thought you actually farted there. No, it's just my lips. Someone must not have liked the guy. Seriously, that's not a good look for your next job. SPX tested the long-term trend on today's drop. Got a small bounce off of it, but low volume and not a lot of range. This could be a first signal of a bearish breakdown. We still want to see that 264 level lost before we can confirm a reversal of the larger run, right, from our lows. But this could be indicative of a top. Right, we formed a triple top, and we failed. ES is up, however, a little bit in after hours, and Nvidia earnings, I'm sure, will have an outsized impact on whether we actually fail here or not. Remember, Nvidia saved us from failing back in February, as did Meta, and both of those earnings turned single-handedly turned the S&P around. So Nvidia still has the potential to do that, and may. But if Nvidia misses or guides down, we're probably going to get a continuation of this drop. Commodities down, second day in a row, a little bit of a gap down today, filling back in the prior gap from a couple days ago, where we had the hot commodities run almost entirely. Still another big downside gap here, but it looks like this found support. So we may push up from here into that test at 108.77 and continue seeing commodities move up after this like pop and a little bit of sell-off that we've seen today. Gold, silver, copper, all down pretty hard today. Yields stayed pretty steady throughout the day. They had a small spike kind of around the FOMC minutes, came back down a little bit, and we got the 10-year rising a little into close. That's still pretty far off from that 4.5 or higher range where we start to look for financial conditions to tighten a bit more. But not that far off. 10-year ending the day at 4.426. Correlation, both on the 3-month and the 1-month, turned around a little today. A little breakdown in dispersion. I think we saw that. I mean, not only in the index, but we saw a little bit of that in some of the underlying, as tech kind of underperformed its recent averages. Japanese JPY USD carry trade leveraging up over the course of the day with a small dip in the middle of the day, but we are seeing more pressure on that leverage. That means margin requirements may be getting a little tighter. We're also seeing a slow turnaround in the forward yields on vol, and we're definitely seeing the inversion steepen, right? So those are kind of starting to pull towards each other. A little bit more momentum on them would probably be a lot more bearish, but we're not there yet. So, but slowly, right? These are the early warning signs of a possible continued correction off of our prior one. Not a lot of changes in bond vol. Tail risk skew continues to pull back with a more outsized move yesterday, and that may have had something to do with that big breakout we got above 320 towards the end of the day. But needless to say that we are seeing some tail risk pullback. Now, if you remember the components, you can look them up on CBOE and the calculation for this. This can actually pull back as people are selling calls. Which may not be indicative that they do not have a tail risk hedge, simply that they're selling vol on the opposite side of the spectrum, right? And so skew can actually spike before bearish things happen. And the likelihood of those things being bearish then goes up with the probability of, an outsized 2 or 3 sigma move increases as skew moves higher. But it's not always it doesn't always necessarily mean people aren't actually hedged against risk. It could just mean that, more calls are being sold, but vol's still being crushed, right? Because, volatility crushes on both sides of that spread. S&P 500 20-day moving average, 70.71% of the S&P over its 20-day moving average, with a little bit of a pullback over the last couple of days, so showing a broader failure across the total S&P basket, and volatility just a little bit more positively correlated today at 37.23. I think the change there is like 0.XX, not a very big change, but a change nonetheless. and slightly more positive correlation there might be an early indicator of more demand for volatility on the long side. And we dropped back down after we got that pump on the Fed speakers, the end of day Fed speaker yesterday, to 0.315 rate cuts following the Fed minutes. The FOMC meeting will have, and the dot plot going forward will probably have the most impact on this over the next few weeks. But we are pricing in a little bit less than 1 1/3 rate cuts right now. And that's about it. So thank you guys for tuning in. I appreciate it. I will see you all bright and early tomorrow, and I will have Pickles Picks out tonight. Have a good night, everybody, and congratulations on FSLR and BNED and whatever else you guys killed it on. Well done. I'm really happy to hear so many people making money. That's cool stuff. Later, guys.